This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Across Bloomberg platforms, we're talking about TV, radio, streaming, YouTube, Venus, Vulcan, Romulus.
What are you talking about?
Happy April Fools. Well, we're on most of those. Okay. Couldn't think of a good April Fool's joke. I know Tim's like, got nothing for you. Come on.
I'm not a funny person.
He is actually.
I'm very serious.
You are a very funny person.
Today's Apple's 50th birthday.
It is.
Did
Happy
you know
birthday.
Happy birthday, Apple.
Yeah, so there is a lot of stuff going on.
Okay.
Hey, all right, so we may not be going to Venus and Pluto, but we are going to go back to the moon. Man is headed back to the moon for the first time
it all comes together.
In more than half a century.
It all comes together.
See, actually, there is a method to this madness.
There we go.
A lot going on. We are actually going to head to the Kennedy Space Center. Our Ed Ludlow is there because there's a mission happening around 6:34 p.m. This evening. And so it'll be the first one, a 10-day mission around the moon. We're not actually going on the moon.
Not yet.
But it's a big first step for man or mankind.
Is it first?
I don't know. No,
Yeah.
it's not the first.
No. As Matt Miller likes to remind us, we've done this before.
He went on quite a rant today. But Matt, we love you. And your rant was maybe well-positioned. We're going to talk to Ed Ludlow about that, about cost and ventures and missions and what it all means.
Well, speaking of well-positioned, equity is well-positioned for a little bit of a rally today, at least, up 1.4% on the NASDAQ Composite, the S&P up more than 1%. We're going to have more from Charlie in just a minute. But it is the first day of the second quarter. U.S. stocks, hopes are growing that the war in the Middle East may be nearing some sort of conclusion. The president is expected to address the nation tonight, 9 p.m., Wall Street time, and we have a good Bloomberg News piece about what he's expected to talk about.
Yeah, I think we're expecting an update on the war, but I don't know whether that means escalation or does that mean we're coming to an end. So we're going to get into all of that. We're just coming off our best levels of stocks, by the way. Also, I had this hour a view on the markets, including how Trump trumps the Federal Reserve. So we'll dig into that.
Looking forward to that. Also, humanity's return to the moon for the first time in more than half a century. We're going to head to the Kennedy Space Center where Ed Ludlow is in just a few minutes.
All right, good stuff coming your way in the next 60 minutes. Let's get you going, though, with a check on that trading session on this Wednesday, although we're calling it Thursday because we're off on Friday, but Charlie, take it away.
All right, here's what's going on. As you guys point out, first trading day of the second quarter, stocks higher, oil lower, bottom line, rally underway. We are off session highs, right to the numbers. S&P up 61, 65, 89 where we stand. That is a gain of 0.9%. Dow Industrials up 334 now, up by about 0.7%. The NASDAQ Composite Index up 293, up by 1.4%. The VIX just above 24 right now with a 10-year 4.31%. The 2-year 3.80%. Gold is up $100 the ounce to $47.69. That is an advance now of 2.2%. A retreat for crude. WTI West Texas Intermediate 99.50 a barrel, down 1.8%. Brent just above $100 now, lower by 3.1%. So bottom line here, stocks higher, oil lower. Oil shares being hit hard today. ExxonMobil, case in point, it is down 5.2%. Chevron down 5.2% as well. ConocoPhillips trading lower by 3.6%. Recapping, stocks higher, S&P up 57, gain there of just about 0.9%. Tim and Carol, that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Busy agenda for the White House on this Wednesday, starting this morning on speculation around a ceasefire of the U.S. war with Iran. President Trump again this morning, initially on social, saying Iran's new regime president, much less radicalized and far more intelligent than his predecessors, has just asked the United States of America for a ceasefire. We will consider when the Hormuz Strait is open, free, and clear. Until then, we are blasting Iran into oblivion, or as they say, back to the Stone Ages. So that was President Trump earlier this morning. Safe to say there's been a lot going on throughout the day here, Tim.
Yeah, and then just about 20 minutes ago, we get news that the Iranian president will release a, quote, important letter addressing the American people. This according to Tasnim, who cited the deputy information officer at the president's office. So we're on standby waiting for that.
All right, so back and forth, and we've got to just kind of keep a watch on it. one wonders what exactly the president's going to say tonight when he gives that speech from the White House. Let's get to it with co-host of Balance of Power on Bloomberg Radio and TV. She is Kailey Leinz, and she's in our Washington, D.C. bureau. Another, quiet day in the nation's capital, Kailey. President Trump, let's start there. What are we expecting? What do we know? Any intel in terms of what he might be saying this evening?
Well, Carol, a White House official told Bloomberg on Background that he is expected to reiterate the timeline he gave reporters in the Oval Office yesterday, which is that this war could continue for another 2 to 3 weeks. He also is expected overall to provide an operational update, according to that official. So it's going to become a question as to whether or not we're actually going to get anything materially new from the president in terms of the trajectory of this conflict, whether it comes to seizing the enriched uranium or deploying ground forces. Will we get answers to those questions? We just don't know. What we do know, of course, is that the president at least publicly claims that Iran is wanting to make a deal around a ceasefire that Iran maintains it is not. Iranian state media pushing back hard on the notion that a ceasefire has been requested today. They say, according to the IRGC, that they are going to be retaining control over the Strait of Hormuz. And of course, for financial markets, that is a major question as to whether or not the president is going to specifically address the reopening of the Strait, or if he is going to reiterate his call for other allies to take the helm on that. As the president has suggested in a number of interviews with Reuters and the Telegraph today, that he is going to tonight send a message directly to our NATO allies that they need to be doing more to help the United States when it comes to this conflict.
Maybe I'm just showing my age, Kailey, but when I think about a president declaring victory or an end to a conflict, I think back to 2003, May 1st, and George W. Bush and the mission accomplished banner. And, going and saying, hey, we accomplished our goals here. And then the U.S. ending up staying in the region for so many years after that. Leaders can say a mission is accomplished. Leaders can say a conflict will end. But that doesn't necessarily mean that activities there will stop, or that what happened before, will happen again, Kailey. So I don't know. I just don't know how to read into something like this. We can sort of jawbone until the cows come home.
Well, Tim, you're exactly right. And what we're hearing from administration officials repeatedly is that this will not become another quagmire, including those in the administration who, of course, have been previously highly skeptical of interventionism such as this, like the Vice President, J.D. Vance. But there's also echoes of that from the Defense Secretary, Pete Hegseth. The Secretary of State, Marco Rubio, has said similar things as well, that they intend for this conflict to be short in duration. But in many of the conversations we've had on Balance of Power, I'm sure you've had similar ones on Businessweek too, with experts in the realm of geopolitics and military, that this is not going to be another Venezuela. Clearly, it has proven that already, and that this is a conflict that has lasted for over a month, not an in and out operation like we were able to do with Maduro. And it maybe is harder to extract ourselves from this particular conflict than it was in what the president has so recently experienced. Now, a lot of this could come down to whether or not there are ground forces deployed, be it to Karg Island, of course, key for Iranian oil, energy, infrastructure, and their kind of economic lifeline. In that sense, at least, or if it would be coming to the enriched uranium, an operation which could take some time. If they're actually to go in there and extract it, that could be something that is a little bit more prolonged in terms of time frame as well. And if we're going to try to maintain control over the Strait of Hormuz, if it's required that a military presence be there, that is something that could extend the duration of at least our presence there, if it's not outright combat operation. So clearly that's something the president would like to avoid. We're likely to hear him kind of messaging around that to the American people tonight, as we see with the American electorate consistently in polling, putting troops on the ground and getting drawn into a long conflict is very unpopular. And of course, also evident in polling is the concern among the American electorate that this conflict in particular is going to hurt them economically, especially when it comes to prices at the pump, which, as you guys know, is over $4 a gallon.
Kailey, I like to say, and Tim, I think has heard me say, if ifs and buts were candy nuts, we'd all have fun at Christmas. But my point is, there's a lot that we know the president seems to want. I think you guys have had these same conversations. It's like from the get-go, what was the plan? What was the mission? Was it about the enriched uranium? Was it about a regime change? What was it about? And I think we still have those questions. And the other side of it is Iran, right? Their leverage is in the Strait of Hormuz. So you do wonder about what do they ultimately want in order for this war to end? And it just brings up so many questions here. Like, will the president
what Iran
just
says it wants is recognition of its sovereignty over the Strait of Hormuz? That's one of its 5 points that it wants to see to end the war. That's something that's a non-starter for the United States and especially for other Gulf states as well. So that is one of the areas in which there's a major question as to whether or not that gap can be bridged between what Iran's desires are and what the United States' desires are in terms of a negotiated outcome to this conflict. So yes, there remain many, many questions. I am not sure how many answers we will be getting from the president tonight when he addresses the nation at 9 p.m. or if this could largely be just a calling out of other allies of the United States to try to solve some of these problems, like when it comes to the Strait of Hormuz as well. He apparently is going to have some pretty forceful words for NATO. Yeah,
busy day, right? Not over. And we didn't even get into the president going to the Supreme Court, but we highly recommend everybody check out Balance of Power later on and the earlier version because you guys were all over this. Kailey, thank you so much. Kailey Leinz, co-host of Bloomberg Balance of Power. Catch she and Joe Matthew. They're coming your way again at 5 p.m. Wall Street time.
Well, from the president's speech to what investors will be watching out for. On that, we welcome Andrew Szczurowski, Morgan Stanley Investment Management Strategic Income Portfolio Manager, joining us from Boston. I want to start where we left off from Kailey and that speech the president is set to give tonight, because markets are, I wouldn't say on edge right now, but they're really looking for clarity from the president, whether we're talking about the equity market, the bond market, or about what's going on with commodities and specifically oil. What are you watching out for tonight to hear from the president?
Yeah, to be honest with you, I'm not expecting to get much in the way of clarity after the speech tonight. I mean, we know that obviously it seems like the administration is looking for a way out of this conflict, but there's two other sides to this as well. There's Israel, there's Iran, and kind of what everyone wants, I think, doesn't exactly line up. So I think Trump is looking to kind of calm markets, calm the U.S. economy. But I don't think he's going to be able to do that until I think there's been a couple of head fakes this over the course of the last month. And so I think that investors, I don't expect Trump to kind of heighten things right now, but I don't expect to get any clarity that is ultimately too credible.
All right. So stuff continues. It sounds like. Andrew, let me ask you, Jamie Dimon said yesterday on Fox that the U.S. needs to permanently remove any threats from Iran, a call that comes as, we've seen the markets bounce on hopes of a swift resolution to the conflict. We know that can change depending on the headlines and what the messaging is. Do you agree? Or, even if that means a longer battle between the United States and Iran and more volatility and fallout in the markets and maybe even, more of a longer term impact?
Yeah, I think what the administration will ultimately do is as it becomes less and less politically popular, we know obviously oil prices have risen dramatically. The longer this goes on, the more it's going to ultimately hurt Republicans in the midterms. And so I think that's the thing that I don't expect there to be a complete resolution that ends with ultimately I don't expect us to stay in for months and months, because I think ultimately the longer it goes on, the more painful it will be for Republicans in the polls. And I think the administration is looking for an out and will look to get out as soon as they can in any way they can.
But getting out, and back to this point about the Strait of Hormuz, because you look no further than what the oil market is doing. And yes, equities are rallying, and they've rallied for the past couple of days, but we're still above $100 a barrel for Brent. So, Andrew, it seems like the oil market is sending this message that we're not totally convinced that there's going to be de-escalation and ships will be going through the Strait of Hormuz anytime soon.
Yeah, I think that the oil tremors are going to linger a lot longer than I expect the kind of U.S. military to be involved in this conflict. We know that if you look at the futures curve, the curve is inverted, and oil prices are ultimately supposed to come down over the coming months as the conflict hopefully comes to a resolution. But this is going to have lasting impacts. It's going to have an impact on the U.S. consumer. We had a weak low-end consumer that's going to be even further weakened by this conflict. And we know there's kind of tax returns that were supposed to help boost that consumer, but this is kind of dramatically eating into some of those gains they were supposed to be getting to start the year. So I think that the U.S. is a little more isolated because we are energy exporters. We produce oil, but if you're an pure energy importer, this is going to have a much bigger impact on your economy. And there's obviously, I think that's going to have a much greater impact on global growth than it will on the U.S. growth, but it's going to have a big impact on the low-end consumer here as well.
Andrew, in your notes you shared with our producer, Talia, you basically say Trump trumps the Fed. I mean, what matters right now, right, is what comes out of the White House, what it may be, not just on the war, but just in general, any policy?
Yeah, I mean, the Fed's hands are tied at this point. Obviously, we don't even have Kevin Warsh kind of getting through Congress yet, but there's nothing the Fed can do to combat an oil price shock. This is a supply shock, not a demand-driven shock. It'd be one thing if the economy was booming so much and that was causing the oil price spike. That's not what we have here. So the Fed is going to look through this. Other central banks, though, don't have the same dual mandate that the Fed does. And I expect as the year goes on and we get to the end of the year into 2027, the Fed eventually will be able to focus on the labor market. Now, over the next couple months and quarters, they don't have that luxury. Inflation's going to rise. The thing is, we were heading for kind of 2% inflation before this had happened. We were kind of rolling off some of those tariffs a year ago, not rolling them off, but they were rolling out of that kind of base impact there. And then so we had a 2.4% headline CPI. There was a kind of reliable trend that was going towards 2%. As the housing market was continuing to slow, that was going to weigh on CPI and bring us down to that 2% number. But the Fed's hands now, they have to kind of sit on them until we get some sort of resolution here. The Fed can't hike, or the Fed can't cut in the face of, $100+ oil that's going to feed through to a lot of other places in the inflation spectrum.
Andrew, if we were, we spent a lot of time in this conversation talking about the war and the macroeconomic backdrop as a result of the war. If we were doing this 5 weeks ago, we'd be probably talking about AI and productivity because that's what Fed Chair Jay Powell is asked about over and over again. And he gives this answer that I think is really honest, which is we actually don't know what it's going to do. So I'm asking that question to everybody we get a chance to talk to. What does it do to productivity in this country?
Yeah, I mean, I think you make a great point because just a few weeks ago, the focus obviously wasn't on the Iran war. It was on the impact of the labor market from AI, the impact on productivity. I think that right now we're still in the first inning of seeing these productivity gains. I think they will come, but I think that a lot of companies like ourselves are in the kind of trial phase. You're kind of using this as a co-pilot, as a sidekick, and then you're getting some gains from that, but more and more white collar jobs I expect to be disrupted over the coming years. I think it's just going to be, I don't think it's going to be some kind of linear move either, but I think we're at a point now where it's still very early stages, but the impact on the labor market, I expect to keep getting worse and worse over the next, 12, 24 months. I think right now companies are, you had a lot of companies that were kind of hoarding this labor coming out of the pandemic. And now I think people are looking at, okay, how much can we replace with AI over the coming months? And is 75% of what a human could replace good enough?
So Andrew, just got about a minute left here. So model portfolio, has it changed much, do you think, this year, kind of where we are right now? Are you positioning and starting to think about the second half of the year? Like, what should investors be doing here?
Yeah, I think investors should take advantage of the 50 basis point or so back up in treasury yields we saw on the front end of the curve. Look, I don't think there's a scenario where the Fed, as I was mentioning, is hiking anytime soon. I think it's a free option for bond investors right now to buy that kind of two-year treasury around 370, 375. That's pricing in essentially, no cuts over the next 2 years. And so to me, that's a safe place to kind of hide out. And then if my kind of macro view plays out, which is that the labor market continues to weaken, you're going to get a tailwind there. I think going out the risk spectrum a little to agency mortgage and commercial mortgage backs is a great place to kind of hide out. If you want either no credit risk in government agency mortgages, use that backup we've seen in mortgage spreads and treasury yields that you can get mid-fives yield there. And we think that's attractive. Yeah. And then commercial mortgage backs, you can get high single digits. And that's our kind of favorite credit space.
All right. Good stuff. Andrew, thank you so much. Andrew Szczurowski, Morgan Stanley Investment Management, Strategic Income Portfolio Manager, joining us there from Boston. Want to take a trip?
Yeah, let's go to the moon. Mm-hmm. Well, we're not one of the 4 astronauts actually going to the moon, but we're going to talk to Ed Ludlow, who's getting pretty close to it. That's next on Bloomberg Businessweek Daily.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We are off session highs. The Dow, the S&P, NASDAQ, though, they do remain very much in the green. S&P right now up 42, up by about 0.6%. 65.70 where we stand right now. We were above 6,600 on the S&P. The Dow Industrials up 236, up by about 0.5%. NASDAQ, meanwhile, higher by 1%, up by 217 points. The 10-year at 4.31. 3.31% with the 2-year currently yielding 3.79%. Gold is up almost 2% now at $47.58 the ounce, but West Texas Intermediate crude oil is retreating by 1.8%, $99.54. Significant, back below $100 a barrel. Brent crude right around $100. Right now, Brent is down 3% at $100.83. Bitcoin, meanwhile, lower, down 0.2%, 68,057 on Bitcoin. Eli Lilly's weight loss pill has won U.S. approval to help people shed pounds or maintain previous weight loss. Lilly's pill is called Foundeo. It'll be taken once daily. Lowest doses will cost $149 a month for patients who pay in cash. Eli Lilly shares, they are gaining today. They're up by 4.8%. Novo Nordisk, a rival, down by 0.7%. So again, recapping here, the Dow, the S&P, NASDAQ, they're all higher. S&P up 0.6%. The VIX just below 25. 10-year 4.31%. Barrel of Brent crude $100.85. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. So we're a little more than 4 hours away from sending NASA astronauts back to the moon. They are, well, kind of around the moon, I should say. They are poised to lift off this evening on a 10-day journey that will slingshot them around the moon, marking humanity's return to the lunar vicinity for the first time, Tim, in more than half a century. So it's been a long time.
He's got a front row seat to it all. Bloomberg Tech co-host Ed Ludlow. He's at Kennedy Space Center in Florida. Ed, set the scene for us. What's going on around you, and where are these astronauts as they do make their way to the vehicle to head to the launch pad?
Yeah, the crew left Kennedy Space Center in the last 15 minutes. They got into their modified, what's essentially an RV, the lunar bus, and are on their way to the pad. And it's so difficult. There's no certainty in space, guys, right? Especially when human life is involved, and this is a human crew. But everything is tracking. You know, the fueling of the SLS rocket and launch system was completed at about 1 p.m. local time. And, you know, we are tracking as best we can to 6:24 p.m. Eastern time to take off. And I am not a meteorologist, as I said to Tim earlier on Bloomberg Television. But, you know, the biggest factor probably is the weather.
Well, how is the weather? That's why I wanted to go, because that is such a big factor of whether or not these things happen.
Yeah, officially, you know, the weather office, the meteorologists at NASA assign 80% favorable conditions. And what we're looking for right now out here at KSE is cumulus clouds that are within the vicinity of Launch Complex 39B. Essentially, the cumulus cloud, you're looking for two things. Can that cloud evolve into a rain cloud? That is a factor. But in proximity to SLS, if we do launch, what would the effect of SLS and the Orion spacecraft atop it going through a cumulus cloud mean? You know, the on board at the base of the SLS system is a rocket that is powered by hydrogen as the fuel and oxygen as the accelerant or oxidizer, and the lightning risk is very real. That's why there are 3 600 feet tall lightning towers around the launch pad, because lightning likes to find the highest point. So like all of this is very real, but it's weird, like everyone is very chill, very confident, cautiously optimistic.
How's it different? Well, how is it different than other? You've been to quite a few of these, and not necessarily, you know, directly related to what this crew is doing, because this is a first in 50 years. But how does this compare to other launches that you've been to?
Well, many of the launches that I've been to have been SpaceX, right? And they've been Falcon 9. Different technology, different design, different fuel, different size. If we go with Artemis II tonight, the combined SLS system with the Orion spacecraft, it's a 322-foot system that has solid motor rocket boosters on the side, capable of 8.8 million pounds of thrust at liftoff. That makes it the most powerful human-rated, human-certified system to ever launch from Earth. And like on paper, SpaceX's Starship, which I've seen as well, you know, is capable of much more power and thrust. But, you know, Starship is nowhere close to carrying humans at this moment in time. So that's the significance of it. And this is a system that's only flown once before. 2022 in an uncrewed mission. It's a program that is over budget and behind in literally years. So there is a lot riding on this. This is the big dress rehearsal for America and NASA's ambitions to return Americans, humans, to the moon.
So I want to go back to Matt Miller, who kind of, I think, approached me.
Matt was not happy.
He's like, he put his iPhone in my face and just said, hey, we had less than this, when astronauts and when NASA first went to the moon. I mean, why is it so complicated? Why have there been so many problems? Why has it cost so much? Why, taking out inflation, but why is this such a big deal when we've already been to the moon?
There's this distinction there, Carol, right? There's what's happened in recent history, and there's what's happened in history. In recent history, the Artemis program was hit by technology delays. For example, when they did the wet dress rehearsal of the system in February, they had a lot of issues with hydrogen is a great fuel for this use case, but because of the molecular composition of hydrogen, it requires very big tanks and it tends to leak. So that has been one issue that they've had to get over in the recent term. Artemis was first supposed to go in 2017. It didn't. It encountered delays. Then we had the COVID era. Eventually went in 2022. Now, in history, why have we not tried to go back to the moon since the Apollo era? Well, it just wasn't really a priority for any of the administrations of the day since 1972. The Artemis program has its origins in the Constellation program that the George W. Bush administration launched in 2005. But when Obama took office, he wasn't that interested in the moon. It wasn't until Trump won where America, through NASA as the agency, became refocused on this goal.
But why is it important to have this goal? And I want to bring into, I know we've talked with you about this, or we've talked with the team about this, what China is up to. Like, why is it that everybody wants to kind of have some access to the moon again?
Yeah, there's two parts to it. There's the political or the geopolitical. China has a stated ambition to get to the moon by 2030. NASA has accelerated its ambitions to return Americans and allies to the moon as early as 2028. That is a space race for the modern era. And then there is the resources. There are minerals, there is oxygen, there is carbon within the moon's surface and within the moon that are useful to humankind going forward. And the final kind of part B of that is that, NASA still holds ambition to take Americans to Mars, and launching from Mars, establishing a resources base, a fueling base on Mars, makes it easier than getting through Earth's atmosphere because of the differential in gravitational field and pull. So those are all real stated reasons for NASA going after this.
Ed, I want to go somewhere where we went a little earlier on Bloomberg Tech, and that's to SpaceX. This in the context of SpaceX filing confidentially for an IPO. You had that piece along with Bailey Lipschultz, a Bloomberg exclusive, about the timing of this. You mentioned Starship, SpaceX's Starship, and a lot of the launches that you've been to have been for Falcon 9. SpaceX's huge Starship. Could Starship do what Artemis II is doing if Starship carried humans?
Yes, I mean, specifically for Artemis, what we reported 10 days ago and then the NASA administrator confirmed is there is a proposal on the table from SpaceX to come in and change how Artemis would run. In SpaceX's proposal, SLS would carry Orion, the spacecraft, into low Earth orbit. Starship would dock with Orion in low Earth orbit and push it the rest of the way to the moon before going down to the moon's surface. The IPO, what I understand from sources, Bailey helped me in the reporting of that, is that SpaceX filed confidentially for its IPO last night, right? Notified the SEC. But their rationale for going public is simply they need money to fund their future business plan for space-based data center. And there, Starship's at the heart of it as well. If that's ever going to work, Falcon 9 is not capable of carrying a data center in satellite form factor into orbit. Only Starship could do that.
Okay.
And the economics of that are measured on a $1 per kilogram basis. That's all anyone cares about. SpaceX is yet to prove that bit out.
So how do you think Elon Musk is watching tonight's launch? I think he'll probably weigh in on X, but how do you think he's watching it?
Elon Musk typically is complementary of his colleagues in industry and their achievements in the domain of space. He often will say, space is really difficult, and what SpaceX did, particularly in the early days where they were on the cusp of bankruptcy and failure, that is very hard to do. And so when others have made breakthroughs, including Jeff Bezos's Blue Origin, by the way, he's taken to social media and been complimentary of it. You will have seen, over time he shared social media posts about the Artemis program, and I wouldn't be a surprise if he came out and wished them congratulations. But again, there is no certainty that we're going to go at 6:24 p.m. Eastern time. There is a good chance, and so we have to wait and see what happens. I know that's frustrating.
Yeah, it's just kind of how it goes, right? It sometimes goes right down to the wire. Hey, before you go, if we may, we wanted to ask you about another story involving Microsoft and Chevron. Microsoft in exclusive talks with Chevron, the integrated oil giant, and the investment fund engine number one, over a long-term deal that would underpin a giant power plant in West Texas, providing electricity to a large data center campus. Is this just another sign of our times in terms of the AI and data center build and making sure you've got the energy to power it?
Yeah. I mean, the hyperscalers, that is Amazon, Microsoft, and Google, maybe with Oracle thrown in there too, are the biggest corporate buyers of energy. In the data center context, you need to have control of the grid, electricity, but how that electricity is generated can vary. You just need to guarantee supply. And basically, all these data centers that have been announced on paper, which we've been over, right, Carol, they have not yet got the energy supply on paper to match them. But in the context of what's going on with the Iran war, for example, people have come to realize nat gas or gas is much more applicable to data centers at the moment. That seems to be the direction of travel, as opposed to like how long it's going to take us to get nuclear sources, other traditional carbon fuel based sources of generating electricity.
I mean, this seems though that this is the bottleneck when it comes to getting these data centers online.
Yes, and also, the issue is, right, the data shows us, the Bloomberg data, because of that deep investigative piece last year, in zip codes where you build a data center right now, energy prices have gone up.
Yeah.
The counter argument from the hyperscalers themselves and from economists is that if you have big corporate buyers of electricity who buy at wholesale prices up front, it will be deflationary in the long run, provided that the supply exists. And right now it doesn't exist. This administration has put deregulation and expedition of permits at the heart of its AI strategy for that reason, to get this stuff built.
Interesting stuff.
We go around the world with him.
I know.
We go to space with him.
You think he's going to put on a astronaut suit?
I think those are reserved for the 4 astronauts.
All right. This time around, Ed Ludlow. Looking forward to your continued coverage. Bloomberg Tech co-host Ed Ludlow at Kennedy Space Center in Florida. When we come back, more on the macro.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are higher, but the S&P 500 index well off session highs. Right now we are looking at a gain of 42 points, up by about 0.6%. But at the best level of the session this morning, we did have the S&P up as much as 1.2%, higher by 81. But again, the S&P right now up by about 0.7%. Dow Industrials up 247, up 0.5. NASDAQ up 214, up by 1%. Bottom line here, stocks are extending the rally, but oil is falling on war and optimism. The VIX right around 25, the 10-year 4.31%, the 2-year 3.79%. Gold is up 1.9%, $47.55 the ounce, while West Texas Intermediate crude back above $100, $100.17 on WTI. It is lower, down 1.2%. Barrel of Brent 101.43 as the two get closer together there. Barrel of Brent down 2.5%. And Bitcoin, little change, 68,257 on Bitcoin. Intel shares are surging now by 9.1%. Intel has agreed to pay $14.2 billion to buy back half of a plant in Ireland that it had previously sold to Apollo Global Management. Again, Intel up now by 9.1%. Headline right off the Bloomberg Professional Service, Stellantis, the automaker, in talks to make Chinese EVs at an idled Canadian plant. We've got shares of Stellantis advancing now by just about 4%. And a headline on the Bloomberg, this from the New York Times: the United States is doubling its fleet of A-10 attack planes in the Middle East. Recapping stocks higher, S&P up 0.7 now at 65.75. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We do want to mention there are some headlines coming from the Iranian president releasing a letter, as was promised, to the American people, addressing the American people. He said Iran never pursued aggression, his word, telling Americans to look past the rhetoric. Also to Americans, the Iranian president, U.S. ties among the most misunderstood. So again, a few headlines, I should say, crossing the Bloomberg terminal. There are other media outlets who are also giving the entire letter. And I'm just looking at one, the full text. To the people of the United States of America, and to all those who, amid a flood of distortions and manufactured narratives, continue to seek the truth and aspire to a better life. Iran, by this very name, character, and identity, is one of the oldest continuous civilizations in human history. Despite its historical and geographical advantages of various times, Iran has never in its modern history chosen the path of aggression, expansion, colonialism, or domination.
We'll continue to bring you headlines.
There's a lot more here
as we do get them. In the meantime, just to hit on something that Charlie hit on just now, the Pentagon doubling its fleet of Air Force A-10 attack planes in the Middle East. That's an aircraft that support advancing ground troops. This according to the New York Times. The Air Force dispatching 18 so-called Warthog aircraft to join the roughly 1 dozen A-10s already in the region that U.S. commanders have used to attack Iranian boats and Iran-backed militias in Iraq. This, according to two Pentagon officials, according to the New York Times.
I just want to go back to the end of this letter.
Okay.
And it says, today the world stands at crossroads. Continuing along the path of confrontation is more costly and futile than ever before. The choice between confrontation and engagement is both real and consequential. Its outcome will shape the future for generations to come. Again, this is from the Iranian president. Throughout its millennia of proud history, Iran has outlasted many aggressors. All that remains of them are tarnished names in history, while Iran endures resilient, dignified, and proud. So this is, again, the pieces of the puzzle that we try to figure out what comes next in the U.S. war in Iran.
Well, this is the environment that not just the U.S. is navigating right now, but it's also the environment that business leaders are navigating.
Totally.
Trying to understand the backdrop of a quickly changing situation, higher energy prices, and a world increasingly looking inward.
Yeah, and something that we talk about, do you look through it, or do you have to start now thinking and factoring it into your strategy? Rebecca Homkes is with us, lecturer at the London Business School and faculty at Duke Corporate Executive Education, previously served as a fellow at the White House's President Council of Economic Advisors, author of Survive, Reset, Thrive, Leading Breakthroughs, Growth Strategy in Volatile Times. She's here in studio. Thank you. Sorry, as we...
That's okay.
Yes.
We are in volatile times, yes.
Well, tell us what you do talk to leaders and how are they managing through like the U.S. war in Iran, or what are they saying to you? What's top of mind?
Yeah, I think the challenge is that this is not a black or white situation. We really have our strategic tools and playbooks are very much geared towards good times and bad times. Like, are we in an upturn? Are we in a downturn? And it sounds silly, but actually downturns are easier environments for executives to grow through. There's very standard playbooks that work. They know what to do. Uncertainty is much more challenging, right? And that's why we're seeing so much unease and hesitation right now.
Is this a downturn?
See, I don't think it is. And I think that's the challenge. Our brains are framed to see things that we can't explain, and especially that we can't predict, as negative. We can't really help it. And if you think about even how we talk to each other about uncertainty, we tend to always frame it as something bad. We're asking each other as leaders, how are you handling uncertainty or dealing with uncertainty or managing uncertainty? We always frame our brains that the unknown is negative or bad, but uncertainty can actually be an amazing time to grow a company, and for many, many reasons, but we need to stop framing the unknown as something that's bad. So if you want me to, I could make a very bear case right now. The bears have plenty of data to make a very bear case, but the bulls have some pretty good data too. The challenge with data right now is we can't build linear models of what's going to happen next. So tell me the story you want me to tell, and I can make the data somehow tell you that story.
But that's interesting because, we were kidding and talking before, that before the war, we were constantly having conversations around AI. And I think you mentioned stagflation, like we were starting to look at that, lower growth in a higher interest rate or a higher inflationary environment. So in terms of what is the fundamentals if you back out the war? Or is that even crazy to do anymore because things are going to be longer term impacted as a result of this war?
The challenge with any prediction right now is it comes down to the duration and the devastation caused by the war. So when we went into this, there were many who believed it would be a couple of weeks. Right. Anyone I worked with, executives in energy or based in the Middle East, never thought it would be a couple of weeks. So most knew this would be 6 weeks, maybe a couple of months, which is looking, unfortunately, like that's what we're going to see. So if the duration is relatively short and the devastation to energy and asset fields there is relatively light, then we could see through this. And I think that's what the Fed is telling us in the last meeting. And that's what many executives are doing right now. But you are forced now to build a model for the other case where the duration is several months to until the end of the year and devastation to energy assets is much higher. Then we have this, what we call this negative doom loop, right? Is if consumers are more uneasy, which they are during a period of a war, and we have consumer sentiment, we know that. That means foot traffic goes down, right? That means we need to change things that we're doing across all the spaces that affect consumer goods. Then, of course, energy prices go into inflation goes up, but I'm more uneasy about my job because of a combination of AI and economic uncertainty. So all of these things start fueling each other, and then it becomes a very difficult job for the Fed to help us solve.
$4.06 a gallon, almost $4.07 a gallon. That's the latest from AAA. Yeah. It's the highest going back to August of 2022.
And the math is quite, if you want to do the simple math there, if we stay above $4 a gallon for the rest of the year, that's about an extra $1,000 tax on the average consumer. Wow. Now,
for the year?
For the year.
I would be shocked if we did stay above $4 a gallon.
Me too. But it's, even if the war ends this weekend, it will be a couple of months before we see oil come back down to that $60 target. There are a lot of reasons why it was there before. And so things don't adjust automatically. So again, even if we have a couple more days, which it doesn't look like it will, we're talking a couple of months.
Do you care about data points or the economic data points that continue to come at us? Do leaders, because you got U.S. manufacturing activity expanded in March by the most since 2022. U.S. retail sales rebounded by more than forecast in February, a broad advance. Consumers stepping up spending after a slow start to the year. Read on private payrolls, U.S. companies added more jobs than expected last month, suggesting the labor market may be stabilizing. We just have about 40 seconds left. I mean, that's real data. Do we trust it? Do we believe it?
We trust all of the data, but we need to separate the headline from the storyline. We need to separate the K-shaped economy, which consumers are spending, which ones are not, what type of manufacturing sectors. And our job is to say, this is the headline, but this is a storyline that matters to me. These are the test and learns, what we call these feeding learning loops that I need in the market. So that's what leaders need to do. Nothing can build a linear model. Not one data point is going to tell you a story. We have to build a storyline that matters for you.
Right. And it shapes what you do, right?
And it shapes everything.
And that's true for leaders, right? In terms of spending or holding back or what have you. Thank you. Sorry that we were a little bit shortened, but come back soon.
I will.
We would love you from London or right here. Rebecca Homkes, lecturer at the London Business School, faculty at Duke Corporate Executive Education. We mentioned her book, Survive, Reset, Thrive, Leading Breakthrough Growth Strategy in Volatile Times, joining us right here in our Bloomberg Interactive Broker studio.
It's just some more headlines from the president of Iran. He suggests the U.S. entered the war as a proxy for Israel and attacking Iran infrastructure targets people. More next on Bloomberg.